Good morning, everyone, and welcome to the Quantum Leap morning pre-market session for Wednesday, July 16th, 2014. My name is Doug McKay. I'm the founder and head moderator for Quantum Leap. Quantum Leap is a self-organized learning environment. It is not a commercial venture. It is a private venture. We are retail traders helping retail traders. We have a Skype room that will be around. It'll come up on our 5th anniversary next month. And if you're interested in checking it out, you can give me a contact request at Doug_McKay. I'll be the one from Windsor, Ontario, Canada. We come into the room, talk about the market, talk about trades, share ideas, and then each morning we come into the session and I do my daily analysis, and then I do my hypotheses and my trade setups. I'm going to veer from our normal practice today of going through the key numbers and the trends macro to micro. There's some things I want to go over, so stick around. Don't skip ahead if you're watching on YouTube. If you're interested in finding out more information about my trading and Stealth Trader and Stealth Analytics, you can send me an email at d.mckay@stealthtrader.com. Okay, so let's get the legals done. This information is for the purpose of educating members who want to expand the knowledge of the business of trading. It's not for trading or investment advice. You and only you are responsible for the trades or investment decisions you make. Trading futures or any instrument involves the risk of loss. Please consider carefully whether futures or options are appropriate to financial situation. Only risk capital should be used when trading futures or options. Investors can lose more than initial investment. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future returns. Okay, and any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence and your own trade plan. One quick announcement, Murad, FT71, Futures Trader 71, did a Tuesday convergence session last night at 4 Eastern. He should have the video up and posted. Basically, it was a discussion with a trader and that trader's progression from beginning to where he is at now. Very good for beginners to watch that, to see what people go through and what the progression looks like. So I highly recommend that you check that out. I don't have any association with FT or Stage 5, but I thought that it was a very good interview last night. All right, so first of all, let's go take a look at what happened yesterday, because you know, last week we did this cup and handle, and I've been watching this cup and handle, and we had a bit of a down move yesterday. They had to go down. They went down to that 1159 area. But again, markets don't move in straight lines, and until this breaks below this 1952.75, even 1952, because if you use Bulkowski's measurements, I use the 61.8. Bulkowski uses 65, but I prefer to use the fib. So you can go all the way down to 1952 area and still not violate this cup and handle that's got a measured move up to 1982.50 or 82 and a quarter if you want to take the smaller measurement. But this cup and handle is still valid, so we're still looking for the market to move down, and that move yesterday was nothing but a rotation to go down and find buyers with more conviction. I'm going to bring up the picture from yesterday just to show you. It was kind of convoluted because I had some some tight levels, but you can see that we tried to break out of a range and value, okay, after opening right at the value area high. We got up to the first level, which we said we were going to see resistance at the 1975. They pushed through a bit, but overall the sellers stepped in, took us down. They paused at the value area high as the value area traders stepped in and tried to battle that area. Eventually, Yellen opened her mouth, okay, at 10 o'clock, yelling at the market, and took us down. And we went down to take out the naked VPOC, the naked close, and test the value area low down at that, what was it, 1170.50 area. They held there, tried to hold again. Destination trade, value area traders stepped in. They pushed through down to test the range and then tried to get back up inside of value and failed to get back up inside value. And then we rotated back down through, hit our first target below range, took out the overnight low and the 1966.75, continued on, tried to hold value down here at the CLVN at 1964.25. They rotated it back up, okay, couldn't get it back inside a range, tested the range range low, and then rejected the range low, and we went down all the way down to right to our main target, which was that CHVN, that key balance area down at 1959. We over printed it by one tick. We one ticked that level, and then we rotated all the way back, okay, until we got back up inside of balance. And right now, when we get to the composite, we'll take a look at the composite and see, where that balance is. It's at 1966 right now is where the microcomposite VPOC going back to, I think, 7.7. Anyway, so I wanted to show that because, my major hypothesis yesterday was a break above that value and a break above range would give us continuation and a move up to that measured move. But why do we have more than one hypothesis? Because we don't know what the market's going to do. All we want to know is where we're going to do something and what we're going to do based on the if, then, that. Okay? So never get biased on anything. Trade what you see, not what you think. And that's the lesson there. Okay, second thing I wanted to go over is the Russell. And I forgot to, do this. But I'm going to bring up what I posted this on Sunday night, okay, and it's, go and review this because this is where I'm expecting the week. The big line in the sand right now is still down here at 1137.50. If we break below that, we're getting inside of the value area high of the accumulation zone down around the 1116.40. And remember that 1116.40 is not just the microcomposite VPOC or the most traded price within the accumulation zone. It is also the composite VPOC, okay, or the most traded price going back to October the 9th, 2013. So this line in the sand right here, if we break 37.50, then, this move up to make new highs and go and test the swing high at 1210.70 and the all-time high at 1212.70 is going to be somewhat diluted, and we're going to come down here and we're going to get stuck in this blunt area down here as we chop around that price acceptance around 1116.40. A lot of undetermined fair value here. But I'm not going to do much more on the Russell in terms of speaking today because I want to keep these sessions short. If you go into the trade room, you can see that, let me just bring the trade room up here. I've posted what my thoughts are and my full hypotheses for the Russell. So go and just review that and follow that for the Russell today. I'm not going to speak about Russell again. It's dead to me this morning. Okay, so let's take a look at the key numbers just quickly. All right, key number 1978.25. Of course, where are we trading at? I gotta always check to see where we are at. We are at. All right, so we're back up in 76 area. All right, so we're just below the year high, the month high, the all-time high at 1978.25. So we're likely to go and take that out. Remember, we've got that measured move at 1182.25, 1182.50, depending on which measurement you want to take. So that's key. We are still in a bullish month. And we did not go down and break the month open at 1954.50. We went down to 59, well 58.75. Buyer stepped in and took us right back up. Now the thing we got to be worried about is Yellen's going to be speaking and yelling at the market again. today. So she's going to be testifying at 9 Central, 10 Eastern. So it's going to be a bumpy ride. I don't think it's going to be a straight move up. They may try to take this up before she even speaks. If they're up here and they're holding above that 76, 70, or the 75 level, then I'm thinking it's possible that that they could take this up and give us a new high before she even opens her mouth at 10 o'clock. So be careful on the open. Let's take a look at. I'm not going to go through the key numbers. I think they're pretty self-explanatory. We had an open auction in range, normal variation, broke the IB to the one side. We had a 5-point opening swing. Don't forget to do your morning auction logic checklist, okay? Because the market told us what was going to happen today, and we were going to get a rotation, or yesterday, we were going to get a rotational day by several clues that they gave us. But you can see that the Globex numbers were higher. We had mixed numbers on the intraday RTH session. Our 20-day ATRs are now continuing to expand out, just under 11 for the RTH, just under 13 for the full session, and just at 7 for the Globex. The value area was lower. We had a lower value area high at 70.75 and a lower value area low at 63.25. But again, I think that's just rotation. We're now above the value area high from yesterday, so we're going to be opening up I think we're going to be opening up just outside of range and values. Let's go take a look at, well, before we get there, I want to jump ahead, and I don't want to jump ahead yet because we've got to take a look at the news. So daily report so far, our full session high or Globex high 77.75, full session low 71. So our 20-day ATR targets 1984 on the full session to the upside, and 1964.75 to the full session ATR target low. We just had PPI and core PPI. 8 o'clock we have long-term purchases. Howard, you going to say something? Did we make a new high?
No, I just wanted to point out that the overnight low was 67 rather than 71.
Yes, it was. Why did I put that? 1967. Thank you for that catch. That's why we have trading buddies. So that gives us, this is even better because it shows that 1980, okay, right between the all-time high and that measured move is our 20-day ATR target, and they're likely to pop it to the 82.25 if we get above the all-time high. At 8 Central, 9, which I think we're just about to hit, and we have news in a minute. We've got TCI long-term purchases, and then at 8:15 Central, 9:15 Eastern, we have industrial production and capacity utilization. Not big news, these three. But the big one is going to be Yellen at the market. Fed Chair Yellen testifying again, and that's at 9 Central, 10 Eastern. We also have housing market index at the same time, and then we've got crude, and then we've got Fisher speaking at 11 Central, Eastern. So between Yellen and Fisher, we could get some rotations, and then of course we've got Beige Book coming up at 1 Central, 2 Eastern. All right, so let's take a look really quickly. Just want everybody thinking in terms of where we are in the trend. Monthly, good slope, good separation, trends intact. Weekly, same thing, trends intact. Daily, okay, didn't break the trend. We went down, but we did not break below the 20 SMA. We tested below it, but we closed above both the 9 and the 20. This trend is intact. Going over to the geometric chart, there's 3 forks on this chart. There's the long-term upward sloping fork, the intermediate upward sloping fork, and then the new short time frame fork that I put in beginning of this week. We still have that measured, that energy point up here at the 1986 area, 1985, 75, or 1986. We're currently testing the center line again, a move above the center line and up to test the upper line of the intermediate fork will take us up to 1982.50. How perfect is that? Okay, right to the measured move to test the upper line. And of course, if we break above, okay, a move to the center line of the long-term fork will take us up into 1997 and likely break us and put us into the 2000s. I really think they want to bring the 2000s into play. If we do not get above the 1978.50 all-time high, and we reject it, we could see a move down to test the lower line. I doubt it's going to happen today, but that takes us down to 1956, 1957 area. So just keep that in mind. Okay, very quickly, let's go to the short-term time frames to see if we have any intraday trends. Whoop, wrong one. I want to go over here. Okay, we still have a trend happening on the 4-hour. You've got a technical gap with a Mr. Sneaky happening here. So watch this on the 4-hour, but the trend is intact on the 4-hour. On the 30-minute, little bit better picture. You got a very strong trend. The price is paralleling the 9 nicely. A little bit of a technical gap. A gap close will likely bring us down into that 1975 area to close this gap. But trend is still very much intact on the 30-minute. And then last but not least, the 5-minute. Again, we have a trend going. We just had a technical gap. Okay, we closed the technical gap right here, but we have not broken below the 9, and the trend is still intact. Lost a little bit of slope. And a little bit of separation. We could come down and test the 20 SMA, and again that takes us down to that 75 level again. So let's go take a look at the big picture. All right, so I drew in a new microcomposite, okay, because we rotated back down, down here. So I'm running a microcomposite from the 27th of June, and the VPOC for that one, the microcomposite VPOC, come on, bring me to the front, is at, I thought it was 66, it's shifted slightly, to 1967.50. So the most accepted price within this longer-term balance is 67.50. The value area high is 74.50, okay, which is just below that key CLVN at 75. So we're outside of the bigger value area, the microcomposite, or the most accepted price of this month in July is down at 67.50, and the value area high is at 74.50. So we're outside of value. And if we hold the 75 level, I'd be looking for that first move to take out the naked close up there at 77.50 and the CHBN and excuse me, and a takeout of that 1978.25 RTH all-time high, and of course we've got the 82. If we get back inside of 75, wait for a break below 74.50, but also the 2-day microcomposite value area is 74.25. So I would be waiting for a break inside of 74 before I would look to get short into targets below, with the big target down here at 71, which is the 2-day microcomposite VPOC, with a small bit of support here at 69.75. 69.75 is the value area high from where they accepted value before, in around the 66.67 on the way up. So let's go and move to our overnight chart and start moving our levels over and setting up our hypotheses for the day. All right, we have a double distribution from overnight, okay, with a key level. Look where it is, 1970.75. What did we say? That 71 was going to be key. Let's bring our ES intraday chart up. Okay, so we have a key level down there, but look what else is there. It's the value area high from yesterday as well. Okay, so LVN from the prior night, price acceptance on the long term, okay, and value area high. So this is definitely, okay, going to be a major key level for us to trade. We're currently trading right at the range high, okay, for yesterday. And this is going to be the other level that I'm going to trade off of. But it's going to be a little bit bumpy, okay, so you got to be quick and tight. If they break back above the range and hold above, look for them to pop up and take out the 77.50 right away on the open. It's likely to get taken out. It's also just one tick below the overnight high. The overnight high is the 77.75. So I would be targeting that pop, okay, on the open if we hold 76.25. They will probably go up and make a new high even before we get, they're likely to pop this up even before we get to the RTH open. So, if you wanted to get long right now, at the 76.50, okay, just put your stop below 74 at 73.75. I wouldn't give it much more than that because it's still going to be sketchy on the open. But if you want to front run this, I wouldn't bemuse you to do that because you are likely to go take out the naked close and the overnight high on the open and test the 78 area. The all-time high. The target above that is 1980, but the big one is still the measured move at 1982.25. And of course, now we have the what was the ATR target to the upside? It was right there too, wasn't it? It was. 1980, okay? And then we've got resistance on the daily up there at 77 as well, with a resistance 2 at 85. Look at where your R1 is on the weekly, right at the all-time high, okay? And on the monthly, you've got R2 at 89. So we've got to go and put the 85, I'm going to go 85.25. And then above that, we've got a target at 89. All right, so anything above the range, get long, stay strong into that 82.25. It's still valid. Now, if we get down inside a range, first of all, I've got to put the overnight VPOC in here, which is this 74.75. That's your first target. Okay, inside, if we break below and hold below the 76.25, look for them to go back into balance, okay, for overnight, okay. But if they hold below 76, we're likely going to come down and test the 70.75 level. It's such a big level, from overnight and in the big picture and from yesterday. And then we've got the overnight low down at 67, which is just below where the naked close is. We've got the naked close at 68. We've got the naked VPOC at 67.75. We've got the overnight low at 67. But more importantly, we've got the monthly most accepted price at 67.50. So I'm telling you right now, if we get below that value area high, okay, at 71, and we breach 71, don't even think about it. Hit that sell button, sell into 67.50, okay, because it's going to be too much of a magnet at that point in time to not trade it. And then look for them to go down, take out the overnight low, and then if they, don't find responsive buyers in the 67.50, okay, area, then they're likely to go down and test the other side of balance. So the first spot I would be looking for below is this 65.25. And so I would mark that. It's going to get a little bit convoluted in here again, just because these levels are tightening up somewhat. But if they don't hold, they're likely to push through by taking out the overnight low to test that 65.25, okay? But if they don't hold that, then look for a destination trade. So if you're shorting the 71 area, I'd do it with multiples. I'd scale and get, and fund it before we get to 67.50, and then I'd let one ride for an 80% value area destination trade down to the value area low down here at 63.50. Below 63.50, okay, we've got that 59 again. And that 59 is this CHVN with the microcomposite VPOC, okay, where they tried to hold value here before going down to that 45 level, and we're likely to go down there and test it. And of course, you've got 58.75 just above it or just below it, so that's going to be a trade area and a target to go down to that 59. If we don't hold the 59, then look for them to come to the other side of that balance around 59. The 2-day microcomposite VPOC is right there, and we've got a naked naked VPOC down at 1955.50 as well. This is a beautiful destination trade, and it is a target. And okay, below that, okay, we got back. We've got the 52.75. Now remember, the 52.75, okay, was the long-term microcomposite VPOC going all the way back to 05.26, and that's the value we accepted before we went up and made that all-time high. So you definitely got a break below this. If they don't find responsive buyers at this 56.25, you've got another beautiful target down there at 52.75, 53 area. And then below that, you've got 51 as possible support. And if we break that, it's back down into this 47 area and that last swing low that we had at 45.75. And that's going to be a target at 47.75. But at this point in time, I don't think it's going to hold, and I think we're going to come all the way down to this 42.75 when we take out this naked VPOC at 1943. So I'm putting a target down here at 42.75. And, of course, the lower side of that is down here at that 1938. Look at that, how the markets are, the Russell, the key line in the sand is 1937.50. The key line in the sand for the ES is 1938. How interesting is that? At least I find that interesting, that the markets are just, the levels are just lining up. And anything below 38 on the ES, I think we're going to come down to this 1914.50 area. Why? Because that's where we gapped up and broke out, is down there. So that's where I'm expecting. I don't think that we're going to hold in this 27 level. I think we go all the way down to 1914 and we see an interim high put in wherever it is. If it's currently going to stay at 78.25. All right, so let's take a quick look at gold. This is something that I've been talking about. Please go back and review the videos. I said if we did not hold that 1306 level, that we'd go down and test that 1300, but most likely we would go all the way down to this 1293. Why? Because 1293, okay, was where the composite VPOC going all the way back to 2008, 10/24/2008. That was where the composite VPOC was just before it shifted up to 1315.80. And I haven't done a download, but if we hang out in this level down here today much longer, and we come back and trade some more around this 1293, 1294, we're likely to get the composite VPOC to shift down. But you can also see that's where the microcomposite, okay, was at at the same place. So, this was, I said the same thing I said about the 71 area. I said, if we get below that 1306 area, don't even think about it. Sell, sell, sell into 1300 and hold one to go down here to 1293. If you don't believe me that I said that, go watch the videos from last week. I talked about this constantly. I still think that gold's going higher, but with the indices going to be pop up and give us this blow off top, it was not unreasonable to think that we were going to come down here and retest this level if we could not hold above that 1306. And it's currently now at 1305. So how do you trade it today? Well, I wouldn't do anything below 1305. If you didn't get long down here at 1293 and holding long still, you really can't do anything because it's going to be jumpy in this area. You have to wait for a clear break above 1305. You could take the break above, the 1299, 1300 for a move to that 1302 again, but I think that's a dangerous play with gold. But if we, get above 1305, take the long into the 1315.80 again, or if we get up and we reject 1305, then I would take the short, get funded before 1302, and hold one to see if we come all the way back down to this 1293 again. If we break 1289.60, then we're going to see a much bigger move down in gold. So I would take the short below 1289.60 for a move possibly all the way back down here to that 1242, 1244 area. So that's what I'm looking at in gold. Just want to take a quick look at where we are in the Renko, just to see where we are against the Keltner and see how that matches up. Oh, we got a walk the line setup going right now. We're above the upper Keltner line. Look for a Renko reversal bar here, and then a Renko reversal bar will take us down to 76 again. I'm sorry, take us down to 75. 75 will get a close below the upper Keltner. That gives us our Renko reversal on the upper line walk, and then the next bar, okay, after that, if it closes back above the upper Keltner line, look for a walk the line up to 77, 75, 78 and a quarter area, and it'll pop up into new highs on the line walk. This is interesting that this is setting up at this particular time. So watch this on the open. It's going to be a telltale sign. Now, I've got a conference call at 9:30 my time, which is in basically a few minutes from now. So I'm not going to be narrating the open. You guys are going to be on your own. Just know your levels, pick your levels, and don't be stubborn with this market today because it's going to be bumpy with lots of news and yelling at the market speaking. And we're trading up at all-time highs now on the ES. Trade safe, trade well, and we'll catch you on the flip side.